So guys, in this video you're going to see me trading coronavirus stocks. Don't forget to thumbs up, comment and subscribe. So guys, as you can see, obviously with all the outfits and everything, I'm fully ready for the coronavirus outbreak. But more importantly, and jokes aside, we've been trading coronavirus and medical stocks over this past week. And today I'm going to be talking about NNVC, also known as nanovirucides, I'm assuming. It's a nano biopharmaceutical company that discovers, develops and commercializes drugs for treatments. At the moment they're working on a coronavirus, almost like treatment, and they foresee this drug being ready by almost August. So the thing with this is, as you can see here, I will walk you through the actual stock breakdown. It's a really bad funded company, so it's never really profited at all, and overall it's basically red on the rating that you can get with Simply Wall Street. There is projected future growth, but overall its earnings and revenue history has literally always been in the red all the way since time has started for the stock back in 2013. So you know, it averages minus what, 8 million a year roughly, so they're not really profitable at all. So it's not something that I think has got any potential long-term growth. However, they made an announcement saying that that they are now in a position to be able to produce a cure for this, and a vaccine. And so what they're planning on doing is looking for external funding to be able to create this and mass produce it and make money from it. However, the likelihood of that actually happening is not very likely. So that's the company. It's a very bad company, and this is what we call just a simple strategic short sell. So I'm going to go over to the broker Interactive Brokers now, and as you can see, I'm sat here with Interactive Brokers, where you can see the price. So overall this stock has been absolutely terrible, as you can see, since all the way from last year. You know, it's kind of gone highs up, it's spiked up here to $14, and then kind of just sat and flatlined between $5 and $4 for pretty much the majority of the year. If we look more longer term on, say, the weekly time frame, you can see overall that this stock has just basically been selling off continuously. So the growth prospects on this is very poor. There's not a chance that I really see the stock actually doing any good. So what this does is it allows for a short-term momentum push to the upside, where a lot of traders would be seeing this as an opportunity that the stock may now be coming to profit, and so on and so forth. However, the realistic view of this is that actually this is just a great opportunity to now short sell and make money from the market coming down. So we saw a price rally going into this announcement, where there was a lot of volume coming into the stock trade that we can see over here. We saw our first red day candle, and this is roughly where I shorted. So you can see my short level was actually pretty much on one of the lows when I thought this is the start of the sell-off, which is around $15.2, and I exited all the way down here at around $7.3, $7.4. So I managed to pick up a 50% short trade on this, which was absolutely a lovely position. I want to explain a little bit more about the whole point of short selling. So these stocks, there is no chance really that they're actually going to be able to make profit, just because that's the kind of company that they are. They've always made net losses, and the only reason why the stock would move up is just due to short-term spikes like we've seen here, with announcements that they've potentially done this or you've potentially done that, and the likelihood of them actually securing anything is very low. So these stocks will rally, and then all of a sudden the realistic side of things will hit in, and they will start selling off dramatically because they know that it's not something that's really going to go and actually be fulfilled and turn into a concept where they've taken that and it's now been dispatched. It's just not something that really happens. And if it does, it's like 1 in 1,000. So the ratio is well in our favour. So the stock here went all the way up to nearly $20. You can see up here, it went all the way up to just below that, $19.50, and then came crashing down to $6.50. So this was a great short sell on NNVC. So coronavirus isn't all that bad for some people when you can profit trades like this. So then we also started digging around and looking at other medical stocks. I won't go into these too much. There's a stock ticker called LLIT. It's basically subsidiaries, designs, develops, markets and distributes medical products and medical components, primarily in China and internationally, being a penny stock where it's performed very bad anyway. So earnings and revenue history, it hasn't been making money really since around 2015. So it's a pretty bad stock in that respect. Overall, the debt has kind of overtaken the net worth now of the stock as well. So that's not a nice thing to see. So the debt's a bit of an issue, but obviously being a penny stock anyway, it doesn't really make money and it's great for a short. So heading over to our charts now, here is LLIT. You can see the stock rallied all the way up here to $3 a share. This is where we took our short sell position. And as you can see, it's come all the way down to around, well, the lows of it was around 0.7. At the moment, it's at 0.9, which is roughly where we got out of about 60% profit, so that's great. So the next stock that we're going to be looking at has a ticker code called MGen. It's called Miragen Therapeutics. It's a biopharmaceuticals company that discovers and develops different diseases, and basically creates treatments for these and therapies. So the stock has been doing very bad in general, and then all of a sudden, out of the blue, MGen rallied from all the way from around 0.6, 0.7 of a cent up to around 2.2, which is nearly a 220% rally. This stock doesn't do anything. It's a bad stock. It doesn't make money. So we've then looked into the news and the reasons behind that. And the reason why MGen rallied, it jumped more than 50% as the company gears up to present new efficiency and safety data from its phase 1 trial for adult T-cell leukemia at the 12th annual T-cell forum on Friday. It's been studied in a global phase 2 trial in patients, and basically they're ready investigational drug for treatment for chronic disorders, a potential treatment and prevention of reduction of keloid scarring, which is under phase 2 trials. Basically, their drugs are under a lot of trials. None of them have actually been produced yet, mass marketed, or gone to the public. So as far as I'm concerned, it is a short-term rally that's going to create the price to go upwards, and then obviously once the news has died down, it's going to sell off dramatically. So we took a short sell position on MGen. We shorted at around 2.05 on the close of the seller's day, and we managed to hold that and exit for around 0.8, which for us was, as you can see here, a solid move of around 57% gain, which is a solid trade to the downside. So everyone, that's MGen. Just remember that some of these medical stocks that have these trials, just because it's gone into a trial phase and it's positive short term, doesn't mean it's going to keep the stock afloat long term, yeah? Especially when their finances aren't in order. Guys, don't forget to thumbs up, comment and subscribe if you want more content like this, whether it's penny stocks, FX or blue chip stocks. Get in the comments below and make sure you subscribe for more content. Guys, there's a lot of bugs going around out there. Make sure you stay safe. Peace. It's possible to get that hot in there. It's only a face mask. Whew. Do I look hot now? Actually, I feel like it's quite a could be a new fashion thing. Yes?